Yo, what is up, everyone? Welcome to our first fucking trade recap. I just got back from the gym. I'm feeling pumped. So let's hit this trade recap. All right, so we are going to be going over the trade I took on June 16th, right? June 16th. That was yesterday. We're gonna go over everything, what I was thinking, what's going on in my head, and then hopefully it can help you guys out. So, let's start off. I always like to start off at pre-market, right? So we're just gonna start off here, pre-market. I'm going to get rid of all of my drawings and let's get rid of my indicators, right? Let's get right into it. I like to start off on the daily, see what the trend is, the general trend. We had some crazy Trump shit going on, pumped up, crazy new week opening gap. Usually I like marking out new week opening gaps, but you gotta think in a day we're not gonna drop around 1.2 thousand points. So why would we mark something out that we're probably not even gonna hit anyway, right? So we don't have to mark that out. We're gonna head straight to the 4 hour. And what are we looking for on the 4 hour? We're gonna look to mark out our external liquidity and our internal liquidity. So starting off, let's mark out our lows and our highs. This is the only low we have on the 4 hour. And then our internal liquidity is gonna be our fair value gap. So we can mark this out. So this should be a little fair value gap. This should be equilibrium. Perfect. And then you're gonna go down to the 1 hour. Do the same exact thing. So let's see. We have this 1 hour fair value gap we marked out. We're on MNQ. That's where I took the trade. And then we're just gonna keep marking out our highs and lows. Of course, if you guys don't know how to do this, then you can always go see the video, see the course. It's going to teach you exactly how to identify highs and lows, how to identify fair value gaps, and shit like that. So let's mark out that fair value gap. Got our fair value gap. We got our liquidity. We got everything. Let's mark this out. Let's mark out fucking fair value gap. Liquidity. All right, perfect. Now we got that shit done. Yo, shit. Yo, my hair looking pink. Cause like last day of school was like yesterday. My friend done sprayed some pink hairspray in my hair. Yeah, that's lucky tough. I know, no, I got lock in. All right, so we just marked out our 4 hour and 1 hour external and internal liquidity, right? External is going to be our highs and lows. Internal is going to be our fair value gaps. So doing that, we can see that we have the draws on liquidity for the first step of our strategy, right? And that's going to be a high time frame liquidity sweep. What is a high time frame again? A high time frame is going to be the 1 hour, 4 hour, and daily, right? They're all going to be covered deeply in the course. I'm just going to skim over. I just want to tell you my thoughts for this trade. Then we're going to move on to the 15-minute. What I like doing on the 15-minute is seeing if I can identify any sort of AMD to get my bias for the day. So, doesn't look like at this time at 8 a.m. I'm not seeing any nice AMD. We have this kind of accumulation going on over here. But what do we do when we manipulate? This isn't great manipulation. It's just a move up, right? You can't be fooled. You can't be tricked by these moves up. This, if you look at a high time frame, this can be seen as a giant look of accumulation, and then we can have a manipulation on a high time frame and then a distribution down. That is one way to look at it, but for me, since I'm looking at like just trading in the first 45 minutes of the 45 to an hour minutes of the day, then I'm looking for AMD on the 5-minute, 15-minute, right? So let's go forward in the day. I'll tell you exactly what I'm thinking as we go forward. I'm still looking for that AMD. I'm still looking for that bias. Obviously, we are at all-time highs, so I'm not looking to take longs. I see a lot of people saying we're at all-time highs, we should take longs, but what are we gonna target? You gotta think about what's the best target. All-time highs is a great target, but there are better ways to take a trade, right? So let's move on. Going forward 5 minutes, another 5 minutes, Let's see what happens. Let's just go forward and we get a dump, right? Now, as soon as I see this is at 8:15. At 8 a.m. to 9:30 a.m. is pre-market, right? And we're gonna start looking for confluences in our strategy during pre-market. We can get every confluence in pre-market. If we get pre-market confluences, we need one, a 5-minute liquidity sweep, and two, we need our entry confluence after 9:30. So meaning we can get everything we need before 9:30, before from 8 a.m. to 9:30, but we need that 1 minute entry confluence on 9:30 and above. And before we get that entry confluence, we need a 5-minute liquidity sweep. Why? Because if you watch TJR's videos, you'd also know this. It's going to be because when the market opens, new money is entering the market. That is going to cause some sort of manipulation. So let's keep going here. What do we have here? We get a lot of breaks of structures, lot of these lows being closed below. So this, since this liquidity got swept, I can get rid of this line right here. Change it out for a liquidity sweep. And then we can mark out some breaks of structure. If we don't need to mark it out, we can just understand that we did get a break of structure here. It's pretty obvious. If you don't know what a break of structure is, again, I'm gonna have some more videos uploaded soon on the course about what those are. So continuing on from here, we're just gonna go forward, see what happens. We're gonna mark out 9:30. 9:30 is around right here. So now what is the next thing in our strategy that we're looking for? We are looking for our retrace, right? We got our confirmation. Now we're looking for our continuation. Now our retrace could be one of these fair value gaps. Now, one thing I like to do when we have a lot of fair value gaps stacked on top of each other, it is actually just one fair value gap altogether, right? So obviously we did tap in. I would prefer a deeper retrace into this fair value gap because, like I said, fair value gaps stacked on top of each other are just going to be one big fair value gap, because if you look at it on a higher time frame, it is indeed just one big fair value gap with a 30-minute, like so on, etc., etc. So yeah, so we have that big fair value gap. I'd like to see some sort of retrace deeper into that to really confirm that we're getting that continuation, because it's a very small retrace, but it does count as a continuation confluence. But let's keep going. What happens? We get another break of structure heading down, right? And then we're just gonna keep playing, see what happens. And we're breaking, we're going down here. We just swept this low. So what are we gonna do? We're gonna take this, going to move this here, gonna mark this as a liquidity sweep. And we have this fair value gap, and if you're in the course, one of our rules is going to be never trade into an opposing fair value gap, right? So let's keep going on this. And now market is about to open in this next candle. So what do we need, right? We need a 5-minute liquidity sweep if we're using pre-market confluences. So that's going to be a sweep of a high like this, or a sweep of another high like this, right? Because we're looking to take shorts today. So let's see if we get something like that. We end up getting that giant displacement up into this fair value gap, like we wanted. We got that deeper retrace that we wanted. We got the market open manipulation, and you can start to see where we're getting that AMD setup, right? You could see this sort of area is going to be our consolidation. Let's mark this out. This is going to be our consolidation, and then we're going to have a nice manipulation leg. This right here, sweeping these highs. That's going to be our manipulation. And now what we can do is we can go down to the 1 minute, because why? Because we had our break of structure, we had our retrace up into fair value gap, And if you go to 1 minute, you can see that we broke structure here. We did break structure here, but what I'd like to do is to break structure below this low. Why am I looking for a break structure below that low? One sec, let me just mark this as liquidity. Why do I want a break structure? Because if we look at the 5 minute, that is our 5 minute low, right? Now there is this giant wick. You might be thinking, why don't we want to break below this? Because that's not a low, right? This is our 5 minute low. This is a down candle and an up candle. This is what we're looking to break below. So let's see what happens on the 1 minute, right? Let's go forward. Another retrace up. We're moving here. Get a little retrace back over there. See what happens here. Another retrace up. And we're moving, and boom. What do we get right here? We get a break of structure below that low, right? Now, see what would have happened if we entered over there off of this, the first break of structure we see. It would have ended up taking our stops out. If we put it somewhere here, we would have gone into drawdown. You know, it's not looking too great. So now we have that break of structure. That is our final entry confluence. I did wait a candle too late, but let's take shorts, right? Now, positioning your stop loss is one of the most important things here. Think about how much you're willing to lose. If you're on a 100K funded account, I'd say risk 2%, 2K. If you're on a 50K, risk 1%. Or risk, risk 2% as well. It would be 1K, right? You wanna keep your risk low. You gotta be comfortable with what you're risking. And you got to understand that your RR, your risk to reward, should always be more than 1. So here we go. Let's see our RR. Our RR is almost 1.4. This is what we're targeting. We put our take profit here because this is a 5 minute low right here. So you want to mark out your potential lows that you want to target. You have these two potential 5 minute targets. You have this right here. And now, if you're taking an eval, there are two different things. If you're taking a live account, what do you want to focus on? You want to focus on win rate. Why? Because that's how you're going to get money to stack up money for a payout. You're not going to be focusing on how much money you make. You want to make more money. You want to get greedy. That doesn't matter. You want to make more money, buy another account. Do not risk more. Do not get greedy. Buy another account, put more capital in. You're focused on win rate. That means if you're on a live account, place partials. This risk management strategy is going to be placing a partial at a low or at 50% of this move. That way, if you hit partials, then you make your stop loss to break even, come back up, you at least secure some profit, right? Maybe that's going to lower the amount of money you make, but that is going to greatly increase your win rate, okay? And that's all that matters when you're trading a live account, a live funded account, right? But if you're in your eval, you have a limited amount of time to make a certain amount of money, right? If you're worried about that, then I would recommend a strategy where you take a trade, you do everything normal, no partials, but just wait till you wait till you're up 1.5K and then sell, right? And that way, if you're taking a 100K account, wait till you're up 1.5% is what I should say for all accounts. But if you're taking a 100K account, you need to make 6K. It's usually 6K in 30 days. You can make that off of 3 trades, if my math is right. No, 4 trades. I'm a fucking dumbass. Holy shit. Yeah, 4 trades. That's why I'm a day trader. But yeah, so 4 trades with 1.5%. You should be passing if you don't take any losses, which you probably won't if you lock in with this strategy and you follow every rule, right? You can't take losses. I'm not saying they're 100% win rate strategy. It is back tested through 15 years of data with an 89% win rate. And that sounds amazing. That sounds way too good to be true. I know what you're thinking, but I'd urge you to give it a try, right? So this is the distribution that we're looking at in this AMD context. So that's going to be another factor that I'm thinking about when I'm looking at this trade. Then we're going to be looking here. We're going to be looking at this manipulation, this fair value gap. We had everything we need. We got the break of structure, we got a retrace, and we got another break below this 5-minute low on the 1 minute, right? So now what are we gonna do? We're gonna enter this trade. So we're in replay mode so we can enter. How do we find out how much we want to, how many contracts we put in? Now, I made a calculator right here. This is going to be tell you how much you should put in, right? So let's say you're taking this trade. You look here, 78.5. You, depending on your account, you check how much you want to risk. If it's a 100K account, I'd recommend risking 2,000. And then you want to go to the stop size and go to 78.5, right? 78.50. That's going to be 13 contracts. Now, if you're doing partials, I'd recommend to just make it an even number so your partial can be an even split or even, half, 50%. But if not, it's fine. And then, so we're just going to enter, since we're not doing partials, we're just going to put $13 in, 13 contracts in, hit sell, put out a take profit and stop loss, take profit, stop loss, and then confirm that, right? There you go. Now let's see how this trade plays out. We end up taking full take profit on that trade. That trade happened in 12 bars, so 12 minutes. That was the trade I took on the 16th. If you have any questions, leave them in the comment section, or if I don't respond, head over to the Discord, join the Discord, ask away. I'll always be there. I'll be responding to everyone in general and questions. Yeah, so that is the trade I took. And I hope you guys enjoyed. So gonna stick to your strategy, stick to your rules, stay disciplined, and that is our first ever trade recap. All right. Good shit, everyone. Everyone being me. First trade recap. Peace.